The deficit is most pronounced in platinum, where dwindling above ground stocks are coinciding with persistent automotive demand and a rapidly emerging hydrogen economy. Earlier this month, the Financial Times reported more than $100 billion was now being committed to clean hydrogen projects worldwide, a development that Stirk believes will keep platinum at the heart of decarbonisation efforts.
From a PGM perspective, hydrogen is the metals that are needed are platinum and iridium predominantly. There is research that's ongoing in using palladium as an alternative in fuel cells and electrolyzers and so on. But for the most part, really where palladium's going to come into the story is in terms of replacing platinum in other industries, so particularly in catalytic converters for internal combustion engine vehicles, in order to free up platinum's availability for the hydrogen economy. So there are benefits for both of them, but in absolute terms, hydrogen is more of a story for platinum than it is for palladium.
Palladium's outlook is less straightforward. While consensus expects a surplus, it relies heavily on increased recycling rates, a risky assumption. And given the reciprocal relationship between the two metals, palladium remains closely tied to platinum's trajectory. For developers, the investment case is clear, but requires effective storytelling.
It's always on the developers to try and get investors enthused about funding their production plans. So ultimately it's about going out there, telling the story. And I think for PGMs, they're not necessarily, because they're quite complex metals, they're not necessarily the best understood by the investment community. So it's really about going out and educating people, which is what we try to do.